very good evening to all our viewers. This is WION Wallet. I am Sumit Chaturvedi. Let's go straight to our top headlines. India's IT bellwether Infosys has reported a 2.8% fall in consolidated net profit to Rs 3,600 crore for fourth quarter. IT major has also set aside 13,000 crore rupees for shareholders this year. And WION speaks exclusively to Infosys CEO Vishal Sikka on the reason behind muted guidance and Infosys results. Saudi Arabia has raised $9 billion in its first international sale of sukuk, more commonly known as Islamic bonds. And Indian equity benchmarks ended the week on a negative note, with Nifty closing below 9200 mark. Now straight to our top story, where India's IT bellwether Infosys has reported a 2.83% fall in consolidated net profit to Rs 3,603 crore for the quarter ended March 31st, 2017. Infosys' fourth quarter earnings, barring bottom line, missed analysts' expectations. Even its FY18 guidance was lower than estimates. The announcement of Rs 13,000 crore payout through dividend or share buyback during the year and fall in attrition rate minimized losses in the share price. Infosys revenue also fell 0.88% to Rs 17,120 crore on sequential basis. Dollar revenue during quarter stood at $2,569 million, a growth of 0.7% over $2,551 million in December quarter, which was slightly lower than analyst forecast of $2,584 million. The IT major has announced a final dividend of 14.75 rupees per share. The board has decided to pay out up to Rs 13,000 crore or $2 billion to shareholders during financial year 2017 and 18. Infosys board has appointed Ravi Venkatesan, independent director, as co-chairman of the board as well. On this occasion, WION speaks exclusively to Infosys CEO Vishal Sikka. Let's listen in.
I would like to ask you about the guidance that has been given, and that is the headline number, the 6.5 to 8.5% revenue growth guidance that has been given. Why such a conservative number? Does this mean that more challenges for IT sector and we'll probably have to make peace with lower numbers of growth?
We say it based on the environment that we see and the outlook that we have for the business, and of course the fact that Q4 was flat in constant currency tends to have a effect of depressing the subsequent quarter growth and so on. So that is some of the factors that went into this. Obviously, we want to do much better, and we want to outperform that and really not be limited by that in any way. It's just the guidance that we have given based on what we see presently. And we have always believed in ensuring that our guidance reflects a minimization of the asymmetry of information between what we see and what the outside world sees. Having said that, in the second half of the year, our software business, software as a service, subscriptions and so forth, which are not seasonal in nature, unlike the services business. So I believe that will have a compensating effect on the second half of the year. And of course, as the year goes by, we'll have better visibility and we'll see where we end up.
So there was some bit of caution in your tone this time when you mentioned about the unanticipated execution challenges. What are some of these challenges, if you could elaborate on that, and especially whether they were internal or external challenges? What kind of challenges are these?
Well, internally we have done an extraordinary job of operational efficiency and getting the costs under control. We have maintained our margin at 24.7 despite the lower revenue trajectory through a very intense focus on cost, on automation. We achieved our growth with only 3.3% employee addition, and which means that revenue per employee has gone up despite all of this. So these are all positive signs from an execution point of view. What I meant by the challenges and the distraction is obviously, the overall environment around us continues to be one in which we have to really ensure that our offerings are competitive, that deliver value to clients. that we are transforming our business towards the newer services, the newer software, and so on, and bringing automation and AI to the more commoditizing part of our business. So all this continues to be, this kind of a transformation. It's a very deep-rooted transformation that we are carrying out, and this itself is not an easy one. And then on top of that, the geopolitical environment and so forth. And then, of course, over the course of the last year, and especially in the last quarter, there have been a lot of distractions with the media and public disputes and so forth, and those always take away attention, and it's not a good thing. But my view is that we have to do our job despite all of that, and we have to continue to make sure that we continue to deliver and execute on the company's priority. The company is bigger than any one of us, and we have to continue to focus on that.
And especially the new appointed co-chairman this time, what will be his role this time? Has it been this new appointment which is away from the tradition? Is this because we need faster executions or more where the challenges are coming right now?
No. See, the board's role is governance. It is the management's, the strategy and the strategy execution and operations is the management's responsibility. So this is a very clear separation in this front. And I've had a very strong working relationship with Sesh, and Ravi has been on our board since before I started. So my entire tenure here at Infosys, Ravi has been with us, and I love working with him. So I'm looking forward to working together, but otherwise, I don't think it makes a significant difference otherwise.
Right. So, rupee has shown some significant strength this quarter. What do you feel the trajectory of rupee will be going forward, and will that cause some further pressure on margins going forward, as it is the band which has been given is quite lower on the lower band?
You never know. I mean, there has been a tremendous amount of volatility in the last few quarters, and it would be completely wrong for me to speculate on where it will go. From a modeling perspective, it is the fluctuations that we see in the currency is factored into our margin guidance, which we have 23 to 25. Last year it was 24 to 25. So rupee fluctuations will play a role in that. But I'm also actually in the building that we are standing in, we have our treasury team, and I'm very proud of the work that they have done despite the fluctuations, extremely managing the currency environment extremely well. Actually, our reported revenue growth of 0.7% this quarter was to a large degree because of the revenue hedging and the work that our treasury team has done.
Right. Two last questions there. My next question is about the challenges that Infosys has been facing within. You did talk about the distractions, and I'm talking about the concerns raised by the founders. And the sentiment outside of Infosys definitely says that maybe all is not well between the founders and board. What is the sentiment within Infosys?
Well, the sentiment within Infosys is that we are working on the company, we're evolving the company from a cost-oriented services where we do the work that others were doing at world-class quality, but for less, towards a company of innovators, a company of entrepreneurs, a company where we bring automation to the work that we do and evolve towards become innovative. That is a massive transformation, and generally when I talk to the Infosians walking around, I mean, obviously everybody needs the news media and it affects the behavior and attention of people. But I generally see that the spirit of inspiration in the Infosian is very much alive and well.
All right, and let that be alive. Just one last question about GST. We're looking at a deadline which is very close by, and it is likely to become a reality very soon. What kind of an impact do you see in the IT industry of GST? Will it be a smooth ride or hiccups?
The thing is, it is a very ambitious and a very complex program. I review it every once in a while. Naveen, our CTO, reviews it quite frequently. We have some of our best systems, best engineers, best processes working on this. It is a program that we are really proud of, and I'm really looking forward to it. But having said that, the requirements on it continually change as states and other institutions are learning to embrace what it will mean and so on. So it's a very dynamic environment. There are constant change and so forth that we have to deal with. And so in any such complex endeavor, it is best to be prepared for bumpy rides, but we have our absolute best attention and best people on it, so I'm really excited about it.
Now, India's state-owned fuel retailers are planning to revise fuel price daily in 5 cities from 1st of May ahead of a nationwide rollout of the scheme. WION finds out the reason behind such a scheme and the results of these schemes also. Take a look.
Daily revision of fuel prices is a scheme Indian petroleum firms are working on. To begin with, daily revision of fuel prices will be implemented in Puducherry and Vizag in southern India, Udaipur in the west, Jamshedpur in the east, and Chandigarh up north. We'll now see a daily change in sync with international rates. This will be effective 1st May as a part of a pilot project. This will be extended to other parts of the country after a fair assessment of consumer response. So far, state refiners like Bharat Petroleum, Indian Oil and Hindustan Petroleum own and operate 90% of the retail outlets in the country and about 200 fuel stations in the 5 cities. After public fuel companies, India's private fuel retailers such as SR Oil and Reliance Industries are also expected to follow this scheme. Bureau Report, WION.
Well, moving on, India's industrial output has slipped to 4-month low, contracting 1.2% in February, mainly on account of decline in manufacturing sector and lower offtake of capital as well as consumer goods. The Index of Industrial Production, or IIP, had registered a growth of 1.99% in February 2016. For the 11-month period to Feb of last financial year, IIP growth was nearly flat at 0.4% as against 2.6% a year ago. For January, the Central Statistics Office, or CSO, has revised IIP growth rate to 3.27% from 2.74% in the provisional quarter. Now straight to an interesting story where billionaire chief executive of Berkshire Hathaway was estimated to have lost as much as $90 million during sell-off of United Airlines. But don't cry just yet for Buffett, just because it pays to be diversified. He also is a big shareholder of American Airlines, Delta Air and Southwest Airlines, which gained from United's public relations fiasco. All in all, Buffett's net profit on airline stocks by calculations has touched $104 million, illustrating once again the investor's talent for making money even when headlines are grim. United stock recovered somewhat from 4% sell-off as industry data showed favorable travel trends. The controversy started after United ordered a passenger to be removed from a plane in Chicago shortly before departure to make room for an airline employee. As video recordings of violent incidents spread on social media, United became a target for condemnation. It is time for a short break on WION Wallet. After the break, we will continue with our coverage of markets. Stay tuned to WION. Welcome back to WION Wallet. After the break, now Saudi Arabia has raised $9 billion in its first international sale of sukuk, more commonly known as Islamic bond. This is Saudi Arabia's big step to move away from being an oil-dependent economy. Bankers received orders exceeding $33 billion and government was able to issue more than $8 billion it had planned to sell. The bonds were equally split between 5 years and 10 years tranches. The 5-year notes were sold at 2.93% and 10 years notes were sold at 3.65%. Given the decline in oil sales, Saudi Arabia expects to run a deficit of about $53 billion in 2017 and hopes to balance it by 2020. But what is sukuk or Islamic bond and how is it different from the bonds as we know? Shilpika from WION explains it. Take a look.
By a bond, you loan a certain sum of money to the issuer for a fixed period of time. In lieu of it, you earn interest on a predetermined interest rate. Sharia law prohibits earning money from money. In other words, it prohibits interest charges. It's easy to say the conventional ways of loan lending are not permissible. So how do we fill this gap between Islamic financing and global markets? Sukuk is to your rescue. When you invest in sukuk, your money is put into an asset. That asset generates profit as a ratio.
There are different types of sukuk. Mudharaba sukuk is a profit-sharing contract between two parties, an investor and the issuer. All profits in the venture are shared based on a pre-agreed profit-sharing ratio. However, in the case of loss, all will be borne by the investor unless it was due to the negligence or mismanagement of the venture, where the loss will then be borne by the issuer. Musharaka Sukuk is a partnership between two or more parties to finance a business venture. All parties contribute capital to it, either in the form of cash or kind, for the purpose of financing this venture. The profits for the venture is then distributed based on a pre-agreed profit-sharing ratio. However, losses are shared on the basis of capital contributed to the venture. A Muraba Sukuk is an agreement between a buyer and a seller for the delivery of an asset. For example, the Sukuk holders buys an asset in order to supply it to the Sukuk issuer who has no capacity to purchase the asset. The holder then sells the asset to the issuer for the cost plus profit, a markup that both have agreed to upfront. The issuer then makes payment to the holder on an installment schedule. Shilpika for WION.
Now straight to our markets coverage, where Indian equity benchmarks have ended the week on a negative note, with Nifty closing below 9200 mark and Sensex closing down 182 points at 29,461 points. The Nifty ended lower by 52.65 points. The market breadth in India was very narrow, as 1,456 shares advanced against a decline of 14,036 shares. We are joined by our guest Amit Gupta, CEO of Trading Bells, to talk to us on markets. Well, good evening, Mr. Gupta. First of all, Infosys as a stock, did the overall reaction of the market for Infosys surprise you?
Not really. The results, although were not very surprising, but Infosys has been hurt really badly because of the global political tensions, as well as the rupee, which is continuously appreciating. This is hurting Infosys, which is a major exporter, as its major revenue comes from dollar. Also, after Trump's announcements yesterday and his statement about the dollar, which is appreciating, and he's saying that the dollar is too strong, which is hurting its exports, that has taken down the dollar index from almost 101 level to close to 100 levels. So Infosys is not just hurt by its results, but also the rupee appreciating. So I'm not really surprised by the recent corrections in Infosys.
But what do you make out of the overall negative trend in the market continuing from yesterday evening? In fact, yesterday they were lower. Today also they ended in red. What do you make out of the market? Are we getting into some kind of lower trend which is going to stay here? What do you make out of it?
This is a minor correction which is happening. Right now, there are global political tensions between the US, Syria, North Korea, and this is impacting the world markets overall, if you see. So it's not just India which is being impacted. Overall, we have seen a great bull run, and I still believe we are in that bull phase as of now as well. It's just a small correction because of the global political tensions. There are certain sectors which are actually doing good, like banking. After RBI announced the banks can invest in REITs, the banking sectors have been overperforming. So pharma is another sector. After the US FDA gave a clean check to Sun Pharma, CLSA has also upgraded all the major pharma stocks. So there are certain sectors which are doing better than others. There are sectors like Tata Motors or the IT sector, Infosys and TCS, which are getting hurt by the rupee appreciation and the global political tension. So these are the sectors which are really dragging the market down right now. But we are still in the bull phase, I believe. And this is the right time to invest for the longer term.
And as far as overall IT pack is concerned, clearly today we started off with first big result, but that clearly missed some kind of analyst expectations. Two questions. First of all, how will it react? The overall, how overall IT sector will react on it, and how do you see the overall corporate results season which is coming?
So the corporate result season is yet to be seen. It's just the beginning, like you just said. In terms of the overall market reacting and the overall IT sector reacting to the Infosys results, I think it is just the results are not as bad as, and it is in line with market expectations. And like I've said, it's the global tensions and the rupee appreciation which is hurting these stocks in the shorter term. So maybe the markets will continue to correct for a little while till the political tensions easing out and till the rupee is showing a stronger trend against the dollar. But once that is over, we can see the reverse trend coming in the market once again.
And Mr. Gupta, IIP was down yesterday. It was down to 4 months low levels. Do you think that any impact of that was visible on markets today?
I do see some impact on the banking sector since the IIP was low, but the inflation was better than expected. So we can see that the growth is lowering, but the inflation is under control. So although many analysts were expecting that a rate cut might not be seen by RBI very soon, because of this data coming out of the growth and the inflation, now we are expecting that maybe there will be a rate cut, which will positively impact the banking sectors. So that's why the banking stocks were also they were forward in marching today, and not just the private banks but also the PSU banks, which has been undervalued lately due to their NPAs, which kept the institutional investors away. So now is the good time to start investing in these banks, especially the PSU banks, where I see value buying coming for the longer term.
Mr. Gupta, global markets are still under red. The FTSE, CAC, DAC and other Asian markets were also in red today. What do you make out of the global markets? Till what time do you think these geopolitical movements will keep on putting pressure on all of them?
Political tensions have historically kept on impacting the domestic and the global markets, and it's a good thing that the markets are closed tomorrow. It gives us a good 3-day break to see if there is some easing coming over the weekend, and if it does, then we can see the markets bouncing back on Monday. But it might continue for a while, as we have seen historically. If it continues for another week or 10 days, then we can see the markets still ending up in the red, not just domestic, but the global markets.
Well, thank you so much, Mr. Gupta, for talking to us here. We were talking to our guest today, Mr. Amit Gupta, CEO, Trading Bell. So he gave a lot of tips on what should be invested in. With this, it is time for closing up of WION Wallet. For more news and updates, stay tuned to WION, and thanks for watching us.